Morning, everyone. Hope you are still awake. For those that are watching World Cup. Okay, so as the title of this event today is a bubble or a breakout. I mean, that's before I start. Who thinks a bubble? And who thinks a breakout? Okay. More people think a breakout? I'm in the same camp, by the way. Before I start with the outlook, I just want to showcase report card, yeah, how my fund managers perform. So sorry, I have to jump a bit before I move to the outlook. Okay, this is our flagship fund, Islamic Asia Pac Dynamic Equity Fund. Okay, so it's slightly different compared to the conventional Asia Pac. So we don't have banks. So in other words, dominated by tech. How will it perform? Year to date, about 61%. On 3-month basis, about 34%. And yeah, so it's done quite well, yeah. So I have not seen this kind of number in 1 year or even 6 months, that kind of return in my career. That's why I mean the title, whether bubble or breakout, it's a good thing for us to just go through how we think about the market. So how these funds are being constructed, you can see at the bottom of the middle chart, 73% are tech related, dominated by Taiwan and Korea. All right. So usual name that you know, Samsung, Hynix, all right, and Hynix overnight in US just popped 13%, the EDR. So this is Dali Global. So this is global, but Sharia. Again, different from conventional. We don't have banks. Okay. How you perform year to date is about 30%. And how he generated, same thing. Tech, 54%. All right. And he overweight Asia, South Korea, which is the right move so far. You can see, I mean, he uses a lot of ETF, and at the same time, I mean, he put in individual names. You can see Hynix and Samsung is the top 3 component there. So another fund that we just entered into iFast platform, Islamic Greater China Growth Fund. So how would this perform? Same, 61%. All right. Again, this is a Sharia product. Again, 75% are in tech. I mean, because this is Greater China, so we can't invest in Korea. So you can see all are dominated by tech names, the top 10. I mean, all these are public numbers, yeah. So yeah, so the talks today about whether a bubble or a breakout. I mean, let me share with you all how we think about the market. So these are just a snapshot of the key market that we monitor. I mean, not all markets deliver a positive return, yeah. Those markets that without tech, the likes of India is down 10%. Jakarta is down 35%. Jakarta is have their own issue there, okay. Malaysia flat 1%, but underlying Malaysia market, tech are delivering about 35% year to date, yeah. So again, it's all tech again. Okay, yeah, why tech? I mean, the last time I came here was 2 years ago, I think. Equity is all about growth, yeah. So those that cannot generate growth, you'll be penalized. So India has been struggling and generating growth for the last couple of months or year, all right? After a strong, more than 10 years growth, high single digit, okay? So these are dashboard that the key investment in principle go through on a monthly basis. So on the asset allocation part, we are overweight equity, we are underweight fixed income, okay? We think the growth is still there and it's very strong going to the end of 2026, if not 2027. So which market that we like? I mean, we are neutral on US, underweight Europe because of the crisis at the moment, and also weak growth. So recently we have downgraded China, Hong Kong. I mean, the A share has done quite well. And we are particularly excited about Korea, not so much of ASEAN. So you can see the strategy for this month. This is the strategy that we went through on a monthly basis. So this time around is more about concentration. Which market that we want to concentrate on. Okay, so at the moment, yes, the market is split between a bubble or a breakout. Okay, because of how the market has performed. I wouldn't say the market is expensive. It's not cheap either. Okay, so those that overspend, that could not generate enough revenue to cover the spending, will be penalized. So the likes of Meta was penalized at one point. All right, only recently they start to outperform again. Okay, so on the Fed side, we are the house view. I mean, our US side think that there will not be any hike. Internally in Malaysia, we think also will not hike. I mean, chances of rate cut in 2027 is higher than a rate hike. Okay. On the tech side, I mean, yes, you can argue that the Micron, the Samsung underperformed ever since they delivered a very strong result. No surprising, which I will share later. Okay. These are earning revision that we track on a monthly basis. You can see are dominated by Asia, ex-Japan. These are all mainly Taiwan and Korea. All right. So you have to think about Asia very differently compared to the past. Okay. Asia right now more than 50%, like I showed earlier, if not 70% of the index are all tech. And Asia is part of emerging market, which is a bigger pool of asset management. Okay, the AUM under EM emerging market is way bigger. But how many do you know that EM emerging market have now all about Asia Pac? 50 to 60%. 50% are just two nations, Taiwan and Korea. If I include Hong Kong, China, and ASEAN, would be closer to 60+%. Compared to like 5 to 10 years ago, are all dominated by all these LATAM, okay? Emerging market from Brazil, Argentina, okay? And Mexico. And those are mainly commodity-based, old economy, energy. Whereas Asia, like I shared earlier, more than 50% are all tech, okay? So because of that, I mean, we are attracting more inflow from the global emerging market fund house as well, because they cannot ignore Asia Pac in the near term to medium term. Okay, so that's why we think Asia still got a lot of room to catch up. So where are the source of growth? They say 96% in tech. No surprising. All right. Followed by Asia Pac, and then the rest is utilities, the smallest there. Okay, but I would think there's opportunity in utility as well, thanks to the tech. So these are the things that everyone is watching quite closely. The AI boom, I mean, the emergence of open AI is the start of the tech outperformance rally, okay? And whether that open AI can translate into revenue is too early to tell. But of course, things are moving in the right direction. I mean, whether Anthropic, OpenAI, Gemini, okay? I'm sure some of you are, I'm not sure how much have you all been using AI, ChatGPT, Gemini, or even Claude. How many of you start paying? Yeah. The pay version is way better compared to the free version. Okay, if not, please try it out for 1 month or 2 months. Okay, you don't need lock up for a year or 2 years. You can try it out. All right. So the darker color are the year-end AI revenue growth that we track. It's high number, big numbers, yeah. 5 times in 2024, 246% in 2025, 2026 is it jumped back up 400 plus. Because enterprise also start to pay for it. Even principal also starts to pay for the AI tools, yeah. And the hyperscaler, the darker, lighter color, hyperscaler are the likes of Google, Meta, Amazon. All right, these are the company. These are not small company, yeah. Okay, for large base to grow this kind of number, 53%, 100%, 126%. I mean, a small company to grow that one also quite difficult, yeah. Okay, this is a large company, trillions. Okay, this is another thing that we track: AI, rental, Hopper, and Blackwell. Blackwell are the chip that produced by NVIDIA, the latest chip. Of course, we are getting the newer one, Rubin and then Vera. The darker line is Hopper that had been produced 2 years ago. It slumped a bit. I mean, the darker line slumped a bit because of the newer chip coming on board. Okay, and then yet, despite the new chip coming on board, the darker line rebounded, trend outwards, because the demand for the chip is way higher compared to what they can produce, even the Hopper chip that at the moment in the market, because of the demand of the AI tools that everyone is using right now. I mean, I'm not just using one, I'm using at least 2 or 3 to test it out, to see which one is better. Okay, every month is different, yeah? Like last month, 2 months ago, I was using GPT. Right now, I'm using more Claude and Gemini. And right now, they say ChatGPT is caught up or even better. Okay, so thank God it's just, I don't need to pay 1 year. I can pay 1 month or 2 months to try it out. All right. So that's why, because of people like me using multiple AI tools that drive all this demand for the chip. Okay, so why I say this time around that it is not a bubble, it is a breakout. Okay, the lighter lines are net profit that being produced by the company in Asia. And the darker line are the combined market cap for the memory guys, Samsung, SK Hynix, and Micron. These 3 guys produce more than 80 to 90% of the memory chip in the world. Of course, China is coming up. But again, try to think US and China, yeah. Do you think US and European would use China memory chip? Think, yeah. Okay. Anyway, we don't think it's a bubble because the market cap are driven by the earnings. But of course, you can be seeing that some strategies say that this is not market bubble, this is earning bubbles. This is something new to me as well. I mean, yes, you can say earning bubbles, but to time it, I mean, too early to tell. Until people like me or the company stop from 3 AI tools to just decide to 1 AI. When this happen, I don't know, to be honest. It could be 2027, 2028. All right. So I think it's a breakout. So my colleague that went Korea and Taiwan that came back, trust me, the conference in these 2 countries is way hot. All right. For the Taiwan, not just investors are there. According to my colleague, a lot of mom and pops, 60 plus retailer actually attending the conference. Yeah. So yes, you can say it's kind of retail bubble. But as long as the company continue to deliver kind of earnings, I think this rally can continue. Another thing I need to highlight why the Micron, the Samsung, the share price was down despite a strong earnings. Equity is all about expectation. Okay? A lot of investors, including you guys, retailer, who buy in anticipation of the strong result. So no surprising that buy the rumors, sell the facts. Another thing also, according to my conversation to some of the IFAS guys, some of you actually buy into leveraged ETF that is on their platform. What is leveraged ETF? So there are ETF that just tied to one single stock like SK Hynix, listed in Hong Kong Stock Exchange and US. US one is 3 times leverage, okay? So 1% move will be 3% move, okay? Those that buy into US leverage 3 times ETFs SK Hynix. Hong Kong one is 2 times. Okay, how big is this ETF right now? 15% of the overall ETF in Korea, yeah? So no surprising that you see that the volatility of this hyperscaler and inclusive this memory name, because thanks to y'all and all the global investors that want to buy leverage product in this bull market. So it is an indicator that, a contrarian indicator that we are approaching a bubble, but I don't think we are in a bubble yet, okay? So expect the volatility to heighten coming from here, okay? But I will take it as an opportunity to actually average down in the medium term. Okay, how about the Iran conflict right now? So as you know that these are the vessels that we track on the 7 loading days. I mean, on the good days, about 1,000 over vessels will go through on the daily basis. And then come to March, close to 20 at best. Okay? And now recover back to 200 plus. And of course, thanks to Trump, it might reduce a bit, but I mean, Trump being Trump. But our expectations are still for it to slowly recover back. All right? But again, whether we recover back to 1,002, I don't think it will be in the medium term. But again, human being, yeah, okay, they adapt. Okay, just like COVID. First 2 weeks, months, everyone was shocked, don't know how to react. Everyone start washing hands almost on hour basis. Don't even dare to shake hands with anyone post reopening. And then people start to carry their own sanitizer, wet wipes everywhere, masks. Same thing, people adapt. How do they adapt? They go to different markets. They go US, they go Russia. And this Middle Eastern guy also building pipes that connect to other ports. And people like us also will start to adapt. We convert to EV, consume less energy. Okay? And this trend is here to stay and will continue to play out. Also, one of the themes that we like coming out of this conflict. Okay? So, Fed, a lot of questions asked. Like I mentioned earlier, at the beginning of the year, before the conflict in February, everyone expecting a 1 or 2 rate cuts, including principal. Okay, we don't expect any height. Post-conflict, from -1 to 2 to +1 to 2 height, is 100 basis point turn. Yeah, it's a big move. That also kind of rattled the equity market as well. Like I say, tech is a long structural investment team. And I'm sure some of you heard about it's a long duration investment because you put a lot of money to build a plant. A memory plant takes about 3 to 4 years for new capacity to be built out. Okay? So it's very key to monitor the Fed expectation. House view, no hike. Also, we have changed from 1 to 2 cuts to 0 cuts this year. Okay, but of course, there's a risk. US is very strong economy-wise. But outside of tech, not really. All right? That's why another thing, so inflation you do to watch out for. But again, its current market view is split. My personal view, I don't think we'll go back to the 2022 period. Okay, coming from high base, yeah. Okay. And who can cut, who cannot cut rate? Obviously, Thailand and Philippines, I mean, the way they read is interest rate minus the inflation. So Thai and Philippines definitely cannot cut anymore. Indonesia can cut, but because of the weak currency and the weak government policy, I mean, they couldn't do much but to increase rate to stabilize the rupiah. Malaysia, I think we are okay. I think we'll go way stronger than what everyone expecting, 4.5% GDP growth. Okay, I think can surpass 5% for the whole 2026. So they don't need to cut for Malaysia's side. So beyond AI investment, what other things? So I mentioned we adapt. Thanks to the war, everyone also increased the spending on the defense. Yeah, no choice. Right now, you can't treat US as a friendly party anymore, whether you are European, Germany, or UK. All right? So this is another investment that we like for principal. Okay, so another thing that people adapt to also is storage of energy in preparation for the next conflict again. We expect this Iran conflict will be here to stay. And because of that, everyone, not just me, everyone also think that way. So that's why they need to increase their energy storage to prepare themselves better when the next conflict come on board. All right? It is worrying, yeah. If you go Vietnam at the first month of the conflict, yeah, okay, because they got not enough oil in their system. Philippines worse. You have to queue for hours to pump your petrol. So China won't touch a lot. I mean, China's underlying economy is just cruising along, not strong, no weak, okay, but it's being driven by export and AI. But it's stabilizing. The government just want to stabilize the economy. Every now and then come out with new policy to stabilize, to grow at 4 to 5% kind of GDP growth. Okay, don't expect much unless the export number weaken a lot, and then they need to do something else. But yeah, there will be a key meeting coming this end of July. To get further indication on what the government want to do. Property is still quite weak in China. No surprising. Aging population, no point buying new property. Supply will increase. Yeah. And you'll be surprised, 10 years, you will see more robots and people, I don't know. Okay. Robots don't need property. Yeah. Export, I say, is continue to drive the economy in China. Okay. So next phase of China will be, won't be surprised, robotic, humanoid robots. Okay, so the last thing that I want to highlight is why I say Asia is not a bubble yet. Positioning. Okay. From the emerging market point of view, I mean, Asia is about 11% of the index. Based on the survey and statistic, global emerging market only allocate about 6% based on latest statistic. So there's a lot of room to go to match the neutral weights, if not overweight. So in other words, there will be another pool of investor outside of Asia that put money in Asia. That's why I say volatility is here, but as long as the earnings continue to deliver, this new group of investors from whether US-based, Europe-based, would not choice but to put in money in Asia. Okay? But we need to be selective here. Okay? So like I say, we like Korea. We are okay with Taiwan. Because Taiwan's 30% are just one company, TSMC. So, yeah, so I mentioned these are the emerging market fund flow. The lighter color are equity. I say emerging market fund manager underweight Asia. Yeah. And 58 billion in the month of June. And to cover back the underweight, we expect to just stay here, if not increase from here. New pool of investor that will drive the market in Asia. Valuation, I won't touch too much. I mean, valuation it can be either way. But if we want to say it's not expensive, as long that the growth can be delivered by the company. Yeah. So again, I think it's not a bubble yet, but it's a breakout. Volatility is here to stay because of the leverage ETF. You should take the opportunity to deploy your cash on every drawdown. Yeah. So another thing to share is as we approach a bubble or towards the end of the equity bull market, volatility will be heightened, largely because retailer will be in, and then we got a lot of funny product that being introduced. So expect the volatility to just heighten as we enter or towards the end of the equity bull market. But we are not there yet. We are getting there, but we are not there yet. Yeah, that's all. Thank you. Thanks.